You have to be serious too. And if you're serious, other people are going to see you're serious. And then opportunities are going to open up. And, bring to the table what you have at that stage and try to figure out how to provide value for people. If they need someone to print out 1,000 mailers and envelopes and deliver them to property owners, then be that person to do that.
All right, welcome back, investors. Today, you'll notice that I have some different background here. I'm recording from my piano room. And the reason for that is that we're retooling the Foundry where leaders are forged daily. We're going to relaunch soon, and I'll let it be a secret for a moment exactly what we're going to do. But we're still all about founders. We love entrepreneurs. We love wealth builders, but I want to focus a little bit more on the freedom that you get from wealth. And so we're going to have a new title soon. Just going to tease it for the moment. And the idea is we're going to focus on that sort of passionate living that you can actually experience once you have the means to do the things that you want. And today we're going to talk to somebody that I've been really excited to talk to for quite a long time, somebody I've been following. We're joined today by MC Lauscher, a dynamic entrepreneur, investor, and best-selling author. He's focused on empowering family businesses and owners through innovative wealth strategies. As the founder of Producers Wealth, he helps families achieve financial freedom and build lasting legacies. His educational platform, Cashflow Ninja, has influenced over 8 million people worldwide with actionable insights on financial independence. Recognized by Entrepreneur Magazine and a Forbes Finance Council member, MC is a leading voice in family wealth and legacy building strategies. So with that, we'll welcome to the show, MC. Welcome.
Thank you so much for having me. Been looking forward to our conversation.
Yes, yes. And as I said, me as well. Still a little rough getting over a cold today, but definitely didn't want to miss this interview. So, first of all, I'd like to give you the opportunity to tell your story, very interesting personal story. So, what brings you into the wealth building field?
Yeah, so I grew up in South Africa, originally from South Africa, born and raised, and grew up during a very interesting time in South Africa's history where they transitioned from one form of government to another. I remember when, we had the apartheid government in place, and all of a sudden there's a lot of negotiations and things going on. Nelson Mandela was released from prison. We had elections, and we had a new form of government. So during that time, I saw firsthand as a young man just what uncertainty does to people. Uncertainty, the madness of crowds was on full display. People just, regardless of where you're at, they just don't behave differently. They all behave the same. I saw it firsthand as a young man, and then I also saw it in 2020 in the United States where people were fighting each other over toilet paper, right? So you had that madness of crowds kind of like going on. And it's, side note, it's interesting. We always think we would react differently if put in a similar situation, right? But it's not true. Everybody reacts the same.
Everybody says that about history, right? If we see this coming again, well, we're going to know what to do. But history rhymes, but it doesn't repeat. And people never seem to quite catch the lesson in time.
Exactly. So I always was fond of learning, and what also just shaped who I am today was just seeing how everything was just it just changed 180. The narrative changed, the history changed, everything changed all of a sudden. So as a young man, I started to, learn that, look, there are many different narratives, there are many different stories, there's just many different versions of history, there's many different versions of events and what happened. So, I really just dove into everything and just try to understand both sides of it and read widely, different kind of like viewpoints, and then come to my own conclusion. And I still do the same thing today in the wealth building space, right? But
Very important.
yeah, exactly, exactly. And I always have, even if I have a viewpoint, I always want to have a conversation with someone that doesn't share my viewpoint, because there's some things that I would pick up from them. And then also, it forces you to kind of like defend your viewpoint, which then makes you think about how you think and how you see it.
Exactly, because it's never the expected that catches you in finance, right? I mean, you suppose you're born in Britain and you see, only white swans. You go to Australia one day and it's like, whoa, completely upset my theory, and now we have to recalibrate all our statistics, right? It's always those black swans that get you, and not easy to do when people are making money, right? People make money one way, and they get the idea that this is the way things work. And then when the economy reverses, and we've had more bubbles than ever. We've got a Fed, we've got a lot of regulation, we've got a very complex economy. Things are changing faster than ever. I was just reading just yesterday about the chariot and how from 3000 BC to about 300 BC, that was the engine of war. And now you can see, in a matter of decades or even a year or a decade, you can go from horses to tanks. So things change a lot faster these days. And yes, we definitely have to, I think, look out for the counterintuitive, the counterfactual, and we have to look for other views. Talking about statistics there, if anybody's wondering about the buzzword there, the counterfactual.
There you go. Yeah, and then I loved history. I loved economics, so I did a lot of that. And then I played sports. I had a scholarship for sports in university, and then after university, I traveled. I ended up in the United States with a backpack, a suitcase, a couple $100, sense of humor, and a sense of adventure, and saw just the amazing opportunity that this country provided and the incredible upward mobility that it also offers as opposed to other places in the world. I played in a sports league up until 2007 here, and as I was traveling, I was the guy on the bus and the plane reading business and investing books and about finance, and that's where I came across Robert Kiyosaki's Rich Dad Poor Dad, which then completely changed my paradigm. And I started to take action. And this was in 2001, buying my first real estate property. And I put some tenants in it. I collected the rent, paid all the bills. There was money left over. And I'm like, this is amazing. We got cash flow, just like in the book, right? And then, of course, school starts. But that moment of taking action really opened up a different world and a completely different perspective and viewpoint. So I started taking the money that I was generating playing sports and doing other jobs, odd jobs, and just buying real estate and investing in real estate. And I started my real estate business then. And of course, once you do that first one successfully, school starts and you're going to get a lot of knocks, lots of ups and downs, but that's been fun. The other thing that I would also say is like, what Rich Dad Poor Dad by Robert Kiyosaki also brought to me was it opened up this kind of like world where I started to realize that something very important is understanding banking, the financial system, the global financial system, and how the world really operates. And when you actually have those three lenses, when you look at history, when you look at economics, and then when you bring in the financial system and how the world actually works from a financial standpoint, a global financial standpoint, you really understand what's going on in the world. One of the examples I always give when I make that statement, someone says, well, give me an example of what you're talking about. The battle at Waterloo, when Napoleon was defeated at Waterloo, was probably one of the biggest events in the past several hundred years, right? Huge. Why? People said, well, it's a battle. Napoleon was at that stage portrayed as the dictator of Europe, this evil, totally evil guy, which is funny. Everybody still copies these military formations and how he goes to war to this day. Of course,
he also spread the metric system and other things. I mean, no political figure or movement is all good or bad ever.
Yes. But if you look at history and at that point and you put everything together, history and economics and how the global financial system works, that really was to determine who was the superpower at that stage. And after that battle, gold went to London in the vaults and trade deficits were settled in gold vaults in London. It became the financial center of the world. the British Empire then really took off because it was a battle between the French and the British at that point. And even before the war, bringing in America here, the Louisiana Purchase happened for a reason.
Of course, it happened for a reason.
Napoleon
Napoleon
went to
wanted some hard
war.
money, didn't he?
Yes, Napoleon went to war with the banking families
Yes.
in Europe. So that is why he was portrayed as one of the bad guys. So instead of borrowing money to fund his army to go up against the British, he had to sell off assets. So that's why the Louisiana Purchase happened. So all of these things kind of like they all come together. If you look at the different lenses, which then gives you a clearer picture, not a perfect one, there's no such thing, but it gives you a clearer picture of what actually happened and what was going on in the world during that time. And then, from just going down that and studying, I read Rich Dad, Poor Dad, by the way, that book. I read it every year, once a year. And I've been reading it now for 25 years. Every single year I pick up something new. Sometimes you just have to read the same books over and over, then try to read 100 new books. And when the student is ready, the teacher appears. As I was building my real estate business, the one year I was reading it and I was looking at the financial statements, it really hit me like a lightning bolt about all these liabilities that's on my financial statements is someone else's asset. And it was all the banks. And I'm like,
that's a key insight.
That's the game. That's the game. Like you could be a player on the board or the board, right? The banks are the board. They create the game. They own the board, and everybody else is just players on it. So I looked at that and I'm like, well, how do I build my own banking system? And that's when I came across, becoming your own banker with Nelson Nash, who became a mentor of mine. And I combined accumulating assets like real estate with a system, the infinite banking system, which as I've been doing now for 15 years. And then as my businesses grew, one of the things is I was sharing a lot of what I was doing. That's one of the things I learn, I do, I teach. And I was sharing with a lot of other people what I was doing. And in that, just sharing and helping other people, showing them what I was busy doing, an opportunity was arise 10 years ago to start Producers Wealth, where we work with business owners and investors and help them and their families set up this exact same system, this infinite banking system, this family banking system, where they always have access to liquidity or, to fund their next deals and then also acquire other assets. And in 2016, I started a podcast, Cash Flow Ninja, speaking to all of my, clients that we have in all 50 states in the United States virtually, having great conversations. And I started to just record some of the conversations, throwing it on. I never knew that show was going to have the legs that it did. 180 countries, 8 million downloads. And it was just talking about different ways of how to generate income, different strategies for wealth building, for different business strategies, how to grow and scale your business, and so forth. But it's been a lot of fun. It's been it's been an interesting ride. I can't believe we're like 25 years into it, since I came to the United States.
Beautiful. And I love that historical perspective too. So another thing that you mentioned was about taking your knocks. You get out there, you form that first business and you take your knocks. So I wonder what do you think about going out there and actually starting a business and letting that be your seminar versus getting expensive mentorship? And I see that you've also done that as well, right? You did get mentored by one of the founders of your field.
That's right. I would say when you're starting out, yes, you should get educated and you can read books and studying and podcasts and YouTube videos. Just think about all the information that you have access to today. That wasn't available, 25 years ago.
It's free
Now,
too.
yeah,
Why
it's
aren't
free.
people taking advantage of it?
It's all free. So you don't have to run out and spend thousands of dollars, and in some cases, hundreds of thousands of dollars for information and seminars and coaching and masterminds. You don't have to do that to get started. For me, I read as many books as I can, and then I actually started to just do things. I'll give you an example. When I was traveling and playing sports in this league, I was basically unemployable because that was all that I was doing was playing sports, right? So I was playing in a different town, a different city every weekend, sometimes traveling during the week. So I couldn't find any other employment because I was traveling all the time. So I was introduced to someone in my network that was in real estate because I said, I'm interested in real estate. If there's someone in our network that I could just talk to and learn from, that'd be great. Because in the book, again, Rich Dad, Poor Dad, The Rich Work to Learn. Anyway, so the relationship kind of started where he's like, well, I heard you're interested in real estate. I said, I actually bought some real estate. He's like, wow, usually people just want to talk to me and kind of pick my brain. You've already taken action. And I said, yeah. And he said, you know what? Why don't you, when you're in town, just come and jump in and we'll find something for you to do around one of our properties. Turns out he was from a family who was one of the biggest investors of real estate on the north side of the city of Chicago. And I mean, my first day, I just jumped on a multifamily property and started picking up trash. And I started by picking up trash. The next thing I'm doing maintenance, like just maintenance tasks. Then I'm painting apartments. And then eventually I'm part of an apartment kind of turnaround crew, running construction crews, eventually leasing apartments, doing property management stuff, working, again, whenever I'm not traveling and playing sports, to eventually managing over 500 units for this investor. And then eventually got my broker's license, was part of the acquisitions team. So I was inside the room to see how they identify properties, how it's negotiated, how they close, everything. So again,
literally working your way up from the mailroom.
There's no seminar that's going to teach you that. There's
Right.
I mean, that experience alone, I drive past a multifamily property right now. I look at it. I know exactly what's going on there. I know what's going on during the week. I know what type of characters you will have, depending on the type of multifamily property. I know the rents, collecting the rents, what that looks like. I know what goes on the weekends.
A
I know
little
the
bit, because I think
complaints.
that some people who may not have had a rougher property at some point in their life, there's a range, right? You could have professional property management, they handle it, and everybody pays by credit card every month or debit card. It goes straight into your account. You got no issues. That's one end of the spectrum. You want to explain, how does it range from there?
Yes. So, and again, to your point, there's different types of properties, and a lot has changed in the 20 years since I got involved. But you'll have different tenants and different types of properties. And as an investor, too, I started as an active investor. So I started learning everything, being actually involved, and I started in single family. I didn't start in multifamily, but I started with getting my hands dirty, and I had, more time than money. So that's where I cut my teeth. But eventually, as you progressed, and while I started progressing as an investor, I started to find partners and people that were doing incredible deals and looking at how I could partner with them. In the beginning, too, as a general partner, and eventually it's just as a passive investor, because again, I get to invest in deals that I know, I understand the property, I understand the area, the market, I understand the strategy, and eventually I can be more as a passive investor in that deal, trusting the operator and their teams. But it was a progression for me from literally picking up trash to eventually now, passively investing in a lot of investments. So there's different parts of how you can do it. And, back to your initial comment of like seminars and mentors and so forth, there were people that guided me in that process that wasn't necessarily, I didn't go to them and say, can you be my mentor? I was providing value, giving them my time and working my butt off.
Key
Really,
insight. Yeah. You
exactly. And
don't
I
get a
learned
mentor
from
by
them as
asking, you
they're
get a
doing that.
mentor by showing who you are.
Exactly. Exactly. And I think also, back to the first point that I made about even the individual that I met, when they realized I've already bought real estate, I wasn't just coming there. I'm coming from a completely different angle from someone that just saying, I'm kind of interested in this. I read a book or I saw a Carlton Sheets ad, around midnight, on late night TV or
Seen those
something.
too. Yeah, go look him up. If you haven't seen Carlton Sheets, the guy was really smooth. He'd show you his telephone calls, you'd listen in, and he would work the phone. And this guy really knew what he was doing. Yeah.
Oh yeah. Yeah. So anyway, so you have to be serious too. And if you're serious, other people are going to see you're serious. And then opportunities are going to open up. And, bring to the table what you have at that stage and try to figure out how to provide value for people. If they need someone to print out 1,000 mailers and envelopes and deliver them to property owners, then be that person to do that. I mean, you never know where
I think that's
relationships
huge because a
go.
lot of people, I think, assume, an apartment. How do I buy an apartment? I can't do that. I don't have a rich daddy. What am I going to do? And you, like many other people, my first apartment, our down payment was $250,000. It was 14 units in Orlando. And it was the lowest price per unit transaction the year we bought it. And that just goes to show that, there are deals out there, hey, they may have a little hair on them, maybe a little rougher. But you don't have to have a ton of money. And I was in a decent financial situation at that point. I could have put in more, but I think that there's a lot to be said. Like you did, you started out with single family, you started out working your way up, being completely active, learning the business before you put in significant sums of money. There's a lot to be said for that. So I know there's somebody listening today who says, I can't do this because I don't have enough money, or maybe because I don't have a master's degree in finance. It's not necessary.
No, you just have to get started. That's a secret to anything that you want and that you want to accomplish. You're here, that's over there, and you can't just look at it. You got to get started and you got to get moving. So start doing things today that's going to get you closer to that goal. So, another thing that I also did when I didn't have any money was look at properties and analyze deals and learn that. And I looked at so many of them that by the time I actually had some capital to deploy and had all of this experience, I understood what a good deal looked like versus a bad deal and what not to do and how you will lose money, in real estate.
Huge.
So,
Going over your deals or going over someone else's deals and letting them show you that this is where you can get tricked and fooled. I mean, do you have a couple examples? Like, what are some things that you learned about underwriting along the way?
well, one of the most important things, not to get into the weeds in underwriting, but is the financing. How
Yeah.
much the operator and the GP team, how much skin they have in the game. That's a big one. And of course, when you're
Huge.
looking at deals, you have to look at the team, the operator, their track record, how long have they been in the business,
Well,
like
what
all
about
that
when
stuff.
the track record was built up? Because a lot of people will show you the most amazing track record, but if they started in 2010 and their last exit was 2022, 2022, we had these extraordinary prices still. That's just when the wheels started to come off. That I wanted to add that that's one thing you have to look at.
100%, because to your point, if you started to jump in 2012, it would almost be impossible to, to lose money with that run up until 2020,
Right.
as opposed to if they started in 2001 and they're still in the game right now, still cranking away, completely
For
different
two
experience.
recessions, two major recessions, right? So the global financial crisis, and then 2020, we kind of had this sort of fake recession. Although if you're in commercial real estate, it may not have been so fake.
Yes, yes. And the other thing is, obviously you have to buy it right with the right team, the right operator. It has to be managed right. Still you got to have the right team in place and the financing. That caught a lot of people in the past, since 2020.
Talking
A
about
lot of
the
people.
variable rate loans. I mean,
The
yes,
variable
these.
rate loans. And I heard people say this in our world of how rates will never go back up again. They're staying right there. And I couldn't believe
We
people
have,
saying it.
massive national debt. That's one reason why they might not go up. But look, inflation. I mean, if you can remember the 1970s, I mean, I remember riding the bus to school and I saw these what would look like astronomical savings rates. I swear it was like 6%. I would look at that and I didn't know really what it meant, but that was kind of my. But what does that mean if you have double-digit inflation? Yeah, it means you're losing.
That's it. That's it. No, and I mean the environment continues to change. If people make bold statements too, this will never have happen again. We will never have interest rates go up. That's usually when you're really poking
Simply,
the
you're
poking the
you're about to
bear.
meet that black swan for the first time.
The South African in me will say you're tickling the lion by the nose. And it might smile at you a couple of times, but eventually it's going to rip your arm off. And you don't want to be one of those folks. And it's the same thing, poking the bear to have a North
Right.
American
I love it.
kind
One
of
of the
phrase.
threads that I notice in your history, it's not about getting rich quickly. Your best-selling book is Getting Wealthy for Sure. And I know that's one of your big themes. So how do you, and coming from, as an immigrant and someone who has seen great financial uncertainty, you know, how do you approach the idea of getting wealthy slowly but surely?
Yeah, so I think it's the philosophy that we've seen out in the marketplace is we're living in a world where, I mean, there's so much information. Our attention spans is so short. I mean, collectively, we have the attention span of a gnat. We have TikTok videos of 30 seconds and people say that's too long. Need to make it shorter for me to consume it. So everybody wants something instant, whether it's instant coffee, instant oats, everything is instant, right? Instant download. You don't want, I don't want to wait for the email for the download. I just want to download it right from the button. So we want everything now. So the whole approach is that there's no such thing as get rich quick. Let's take away all the doggy coins and the meme coins and all these pump and
Yeah.
dump stuff. There's no get rich quick. If there is, please let me know. I looked really hard for it when I was younger. I couldn't find it.
Well,
So
those coins are ridiculous. Yeah, there's that what is it, the Dogecoin? Yeah, you mentioned, and then there's things that I can't even mention on the air because they're vulgar. And people will make a coin and they're actually making money off of it. And you have to wonder, when do other people, or when do the true believers realize that they've been taken? And then that's when things are going to collapse. So don't know what's going to happen next.
exactly. So the whole approach in my book, Get Wealthy for Sure, the number one financial strategy for business owners to multiply wealth predictably is, look, there is a system, but it's discipline. This is not a pill that you can swallow and it's going to cure all ills. And it's not an Ozempic injection or pill or whatever. I don't even know how you consume it.
Exactly. People don't even work out anymore to lose weight.
Exactly. This is an approach. This Get Wealthy for Sure approach is, look, using you as the asset and looking at your business as your biggest, your number one investment. How do we build a system around you and your business? Which, if you're an investor, you're in the investment business. How do we build a system where you have money that's guaranteed, growing, tax free? You always have access to it to fund more deals that reduces your taxes and increases your income, and bring that back into the system. So it's this whole family banking system, your own banking system, paired with your business. And it's a system I've been following for 15 years. It's very, very simple. It's very easy to set up. It's so simple it blows people's minds when I show them what I've been doing for 15 years, and it just eliminates the uncertainty, what I talked about, seeing that in South Africa, providing a lot of predictability in your financial life, and then also providing clarity. Because when you have the system in place, which revolves around you, gives you control over your capital, gives you control of where you invest it, in the place that's going to generate the biggest returns for you. You're in control of this because you control the system. You are now the board, like the bankers
So
are the
let's get
board in
back
our
to that. You
financial
started
world.
out by talking about banking and the history of banking.
Yep.
And one of the things that I've noticed about banks is they never lose, or rarely. Now they
Yep.
do make bad loans. Sometimes they go a little hog wild in good times and get too optimistic. But by and large, they're really not losing. It's the equity holders that get soaked when we have recessions. And these banks, even when things are bad and times are tough, they can usually just foreclose. They can recover a significant proportion of their capital, not so with equity. Banking, there's a lot to it. So the idea of you being the bank, as you mentioned, that debt that you have to repay is someone else's asset, right? They expect to get that and more. So explain the system. And you said it's very simple, and I agree with you. It's not rocket science, but I think you would probably agree it's not something that you really want to go and do yourself. You don't watch 1 or 3 podcasts and then say, well, I'm going to set up this sort of an infinite banking system.
That's actually how it could go wrong. If you're going to try and do this yourself, you're going to set it up, because the infinite banking system revolves around setting up a family bank and your own bank with very specifically designed life insurance contracts.
Right.
And I'll just share, one of the people that changed my life too was that very, very wealthy friend that I met that owned all of the real estate. And one of the things that I learned from him too, that kind of brought it all together for me, was he explained to me, look, we are a third generation family. We have had a family business that have generated a lot of income for our family. So we have operating business that generate all this income. We take all the money and put it in life insurance contracts, and then we leverage the contracts to go and buy real estate. And we just do it over and over. And we've been doing that, for 3 generations. And by the way, they were shareholders in a bank, which they didn't even put their own money in that bank. And I said that I don't understand that. Please explain to me how you are a shareholder, an owner of a private bank, but your own money's not there. I said, no, MC, that's where other people put their money. We put our money in our banking system in these insurance contracts. So how you set this up, and I'll give you an example of just how I'm using it too, is you have a way of generating income, an operating business, or even if it's your investment business. Then the answer becomes, well, where do you put it? And the vehicle that we copy and paste it from family offices is life insurance. It's very specifically designed. It's designed to maximize the cash value. So 70 to 80% of your premiums, depending on age and underwriting, should go straight towards your cash value, which is the savings. So $100,000 that you put into it, you should within 30 days have more than 75K approximately in there in your system. And every year this gets built up. In that same example, 10 years in, you're going to have, you would have put in $1 million. There's probably going to be $1.2 million in there tax free. And again, just using this as an example with a death benefit. So why do you put it there? The money is guaranteed that you put in there. It'll never go down ever with the markets. It's not tied to any market. You're using a very specifically designed dividend paying whole life insurance policy with a mutual life insurance carrier. You're getting about 6% dividends now, which is also tax-free. And then you get to place the cash value as collateral for loans. So if you have, let's just say $500,000 in your account, and let's just say you needed $100,000, you would place that cash value is collateral for a loan, which you then would get at, let's just say, it's 5% right now. So 5% currently, 6% dividends. So how we use it is you can have a trust, a family banking kind of system set up with all of your family policies, and that family trust can become the lender to your investment business or your operating business. And through this process, there's a lot of arbitrage involved. So I'll share this very simplified example with you.
Well, here, can I just stop you right there? Because I feel like this is where people say, well, MC, this has got to be a scam because I don't understand. I put the money in there and I've got this cash value. I understand that. And I've got this death benefit and I can keep that death benefit and tax-free, et cetera, et cetera. And at the same time, I can take that money and I can invest it somewhere else. They're going to actually give me that cash. Well, one reason they're doing that is they've got some pretty good collateral on that loan, don't they? Right? They've got your death benefits.
2 pieces of collateral. So the life insurance carrier, the reason why they allow that is they have 2 pieces of collateral, the cash value and your death benefit. There are banks now offering a similar program. It's called LILOCs, Life Insurance Line of Credits. And I have conversations with all these bankers. And I actually spoke with one and I asked them, their rates are around 6% for their LILOCs and their HELOCs are 8% plus right now. And this is a couple of weeks ago that we spoke. And I said, this is interesting. How is your life insurance, your LILOC rate so low and your HELOC rate so high? And she said, she was chuckling. She said, MC, the banks trust life insurance more than they trust the real estate right now. Because if you think of it from just a risk standpoint, if somebody fails to make a payment on real estate, the bank has to take possession of that property, then sell it at a discount. I mean, it's a whole process. That they eventually could not recover all of their
There's
money
all these things that go along with that.
Yes, where with life insurance, there's two pieces. There's cash value and there's death benefit. So they could keep charging fees if the people fail to make payments. That'll keep adding up because eventually the person will pass away and they will get repaid all of the outstanding loans plus the fees. So yeah, so there's two pieces of collateral. So I always, from a risk management standpoint, you always have to look at all the different sides, why people would allow certain things. And when you look at it from both sides of the table, you understand why they're doing that. I'll give you just a quick example of how it can be used. So let's just say my business needs $100,000. We need it for, to hire employees, bring in technology such as AI, which we've done quite a bit. So the $100,000, there's a family trust with a family bank. That's where it's going to come from. So the family trust, which owns the policies, will then have the cash value as collateral. So they will get a loan from the insurance company. And let's just say it's at 5%. The family trust would loan that $100,000 to my business at 10%. My business would take the money, hire employees, bring in AI technology and so forth. So what just happened in that transaction? So number one, you never touch the money that's inside of the life insurance policy. You place it as collateral. So it keeps growing, tax-free with uninterrupted compounding. Okay, so that's the one, and it has a death benefit. So that's the one thing that's happened. Then you were able to collateralize that to get a loan of $100,000 at 5%, which you'll pay that 5% to the insurance company. But the family trust loaned the money to my business at 10. Pockets a spread of 5, right? On $100,000, it's $5,000. My company used that money to go and hire an employee or incorporate AI, which generates more revenue. And then we pay back the loan with interest to the family trust. So there's so many different areas which one pool of $100,000 of capital is doing things for you. It's doing multiple things simultaneously. So it's just a more effective cash flow management system. And again, you're the bank. You're the board in this whole transaction. What if my business is late on a payment? What if something happens in the economy and we're struggling to make a payment? Well, you're your own banker. You're not going into a big bank that's probably gonna, put you in a really bad spot and start, taking some assets or charge you penalties, fees, interest. You are your own banker in that situation, so you can renegotiate the terms. So it's a system that you could set up. And again, to your point, I wouldn't go run out and try to do this myself. This is what we specialize in. This is what we do. We do this with clients in all 50 states. But it's just a more efficient system. It's just a more efficient use of capital.
Yeah, beautiful. And knowing as a student of history, I'm sure you studied the Rockefellers and how they've preserved wealth. Now, is there anything from their system that you'd like to highlight that's helped you?
Here's what the Rockefellers do too. They do this, and then they also have a system called the waterfall. Other people call it the Rockefeller method. It's called the waterfall method. So what does that mean? So the waterfall method is where you can contractually multiply wealth within your family every single generation, contractually. So how does it work? So generation one would max out life insurance contracts on themselves because you use that as a banking system, and it also has a death benefit, so you max it out. So when the first generation passes, there's a waterfall of millions of dollars, tax-free if structured correctly, to the second generation. The second generation maxes it out. And then when they eventually pass, contractually, there is a waterfall of millions of dollars to the third generation. And it just keeps going on and on and on. And of course, you could have a legal framework with trusts which set this up, that this is contractually how this is going to happen, that no one can change that. So where the Rockefellers are at is every single generation billions of dollars fall over from one generation to another generation. They have a family bank, which family members apply just like they would do at a regular bank to access capital for education, buying, houses, investments, startup businesses, and so forth. They will then pay back the family bank just like a regular bank. They can apply for more lending from that bank. And you're gonna have a black sheep in your family. It's just gonna happen.
Well,
And
exactly. I think the Rockefellers now, I want to say that their descendants number over 200.
it's incredible. And they're all part of the system. And when
Whatever it is, it's a lot.
of, of course, and when you do have a black sheep in the family that borrows money and doesn't handle it responsibly, and spends it, on things that they probably shouldn't, that family member will eventually pass away, and that policy will pay out to that family bank. So they will be made whole and then some. So there's a system in place even to manage that type of risk in their strategy. So it's an extremely powerful strategy. My philosophy is it's always been you don't have to be a Rockefeller to do what the Rockefellers do. You can have certain structures and strategies in place similar to them. There's just a lot less zeros, and you're going to see an exponential growth in your wealth and the trajectory of the wealth of your family for generations.
Well, this is beautiful. And, we didn't really get into the weeds, so to speak, about how to actually set this up, the nuts and bolts. Because, of course, I think that two of the biggest lessons you've given us so far: get educated. Nowadays, education is essentially free. Just go out there on YouTube, learn about this, watch a few podcasts. But when you actually get to setting it up, as you mentioned, you need a very specific type of policy and understand how to run it. You're definitely going to want to get some guidance there. Go out, find somebody, MC, who can help you with this. So, are any other major lessons that you wanted to leave the audience with about how to set up this sort of an infinite banking system or family banking system?
Yes, there's a lot of misinformation these days on this type of stuff, and all of it.
That's the problem with the free education, right?
All of a sudden, this has become very sexy. When I started to do this 15 years ago, people thought I was crazy. And now there's a lot of people sharing information on TikTok videos and even YouTube videos. So you got to be very, very careful. And that's why I wrote the book too, Get Wealthy for Sure, is to share a lot of, and just debunk a lot of the myths that are being
You
shared.
can get a free copy of that too. Can you tell us what do they do to reach out to you and get a free copy of your best-selling book?
Yeah, and thank you for asking. I've actually put a page together for your listeners, producerswealth.com/the foundry. That's producerswealth.com/the foundry. And if it's easier for some folks to remember, there's also a page set up at getwealthyforsure.com. But when
We should mention, you do notice that we spell the foundry wrong. So if you're listening to it, I spelled it uniquely like founder with a Y. So make sure that you spell it right. Don't miss out on this offer.
yes, that's very good. And yeah, and if they don't find the page, they could also go to getwealthyforsure.com.
Yes.
But we have a free paperback copy that we can ship to you. You only pay the shipping and handling. That's what you're going to find there. So just request your free copy of the book and we will ship it out to you. You will also see a link to all of our presentations sharing exactly how to set up this type of system and how these policies need to be set up, and also what are some of the pitfalls are and how they should look when they're set up correctly. And of course, the biggest kind of like contributor to success of the strategy is the ongoing coaching, and that's myself and my team. So if you wanted to book a call with us and explore options for you and your family and see what it looks like to work with us, there's also a link at that page that you can just click on and submit your information and we'll be in touch. Again, it's producerswealth.com/the foundry with a Y. And then again, if you do not find that, you can also go to getwealthyforsure.com.
Beautiful. And here at the Foundry, or as I said, we're going to relaunch this. We're going to have a new title soon. We're all about passive investing. I'm just holding up my book if you happen to be listening to the show rather than watching on YouTube. this works great for active investors, passive investors. But one of the other things, as I mentioned at the beginning of the show, that I really like to draw out here is the story of the value of financial freedom. And it's not just that you have stuff. In fact, I would venture to guess that stuff is probably not the most important part of your financial journey. I know that you end your emails. I think your tagline is yours in sovereignty, right?
Yeah.
So maybe you can tell us a little bit about that, or tell us about how building wealth has impacted your life. How's it given you the freedom to do the things that you enjoy to do?
Yeah. So if you think about freedom, the concept of freedom, Dan Sullivan talks about a freedom of time, right? How you spend your time. Do you have to spend your time doing certain things, or do you choose of how to spend your time? And then, of course, money. Is money a reason why, or why you're not doing things, right? And then, of course, relationships. Are you spending time with the people that you want to spend time with and enjoy spending time with them, or are you forced to spend time with them? And then purpose. Do you get to work on the things that excite you, fuel you every single day, that's in alignment with your purpose? So those are the four freedoms that he talks about. It really resonated with me when I think about freedom. But there's also one missing link, and that's why I always talk about sovereignty. Is how much control do you have of all of these things? Can your freedom just, all these four freedoms, can they just be taken away like instantly with a black swan event or something, coming out of left field? And a lot of people learned that in 2020. I talked a lot about freedom and what freedom is and what freedom means. And then all of a sudden we had, the event in 2020, and all of a sudden people started to realize, oh, I was free. I had all these freedoms, but I don't have control. So there's an element missing. That's why I bring in the sovereignty of how much control do you have? How much dependent are you on systems that could fail you at any given point in time? And then true wealth. I mean, if you bring that in, you mentioned that wealth building, my greatest source of wealth, if you think about it, is your health and your family. A person that's sick has one wish and one dream. A person that's healthy, they have unlimited dreams, right? And goals. And of course, family. That's the most important thing at the end of it. And the reason why I'm doing, what I'm doing too, is to again, create an amazing life and provide an amazing life for my family. So that's the reason why I do it in the first place. So when it comes to wealth, I really think about all the really the true forms of wealth, and it's just not the money side of it. Obviously, that helps a lot, but I think sometimes it's important to notice too your health, your family, your relationships, friendships, and so forth. Those are important parts of wealth too.
You absolutely love it. And, classic formulation of freedom, the four freedoms. Just if you don't mind, if you want to send us out with like one personal story, like for me, here, I'll try and stand up here. So I lost 30 pounds.
Yep.
I learned to dance. That's something I talk about in my book. And I also had an opportunity to get back to music. So I don't know if people recognize that's Frederick the Great there, also a flautist. Uh,
Great.
yeah, that's when world leaders wore silk stockings. Very different time of the world there.
Yep.
Different fashion sets. Franz Liszt, I've got my muse over there, my piano. So I love to shoot in this room because, for me, this room really highlights for me what it means to have financial freedom. I can have a beautiful interview in the middle of the day, meet true experts in my field, and do it in my preferred surroundings. Here, surrounded by music and the beauty of art. So, yeah, if you wouldn't mind, can you just give us a personal story about some things that you're able to do now that wouldn't come with a 9 to 5 or a more standard existence?
Yeah, so last year, we homeschool our kids too. And last year, we just went to South Africa for a month too. Took a month off. We could have stayed a little bit longer. But yeah, that was the one thing. And I mean, like for a week, we were basically unplugged on safari. It's just amazing. So that's the freedom that I'm talking about. We were just looking at it and looking at, what we wanted to do that year, and we're like, oh, let's just go to South Africa. We'll stay there for about a month. So we did. Visited family,
And that's the
friends.
sort of thing you can do. You didn't have to ask anybody. You just plan it, you decide to do it, and you make it happen. I think that's Absolutely beautiful. Africa, definitely on my list of places to visit. Very beautiful, fascinating, deep and rich history there. Well, I want to thank you very much for coming on the show. Thank you for sharing your knowledge and experience with our audience. Just want to make sure people know where to reach out to find you. You mentioned your website. Anything else you want to leave them with?
Yeah, no, thank you. I appreciate it. It's been a lot of fun. So the website again, producerswealth.com/the foundry with a Y, or getwealthyforsure.com. And then again, everything is at producerswealth too, .com. So really appreciate you having me on.
Absolutely. It's my pleasure. Thank you.